So quick kind of random video here. I was clicking through a bunch of tickers as I've been known to do and watching some Kulamagi struggling trader review as I was clicking through some, listening to what he had to say. And the chart of Coke caught my eye, similar to when I was talking about AOSL in some previous videos. The Coke chart, so here it is on the daily. It caught my eye on the weekly, which I'll show at some point here. This is the COVID sell-off, but notice as I scroll to the right and it builds the right side of the chart, notice how this looks. Like here it's randomness, super choppy, like no logical reason to buy anywhere in here. And now, see how it comes up? Now, after this kind of area here, maybe somewhere in here would have been worth taking a stab. I'd honestly say no though, because there's not enough of a base, of like a solid sideways base. Like kind of like in here would be all right, but then of course it failed. And here would be somewhat okay, a little bit of a flag going on there. Not much follow through though. But once it makes this big upward push, sure, you could have, done the kind of like Mark Minervini and them, like they'll watch a cup like this form, and ideally it has a handle, but kind of buy as it breaks through this resistance point at the top of this last hump, and then ride the momentum upward. Or some people may have been trying to buy this off of like the 100-day moving averages right in here, the blue, the EMA and SMA. But realistically, what caught my eye is after this big move here, you see all this building. This has really caught my eye. So this is months, since this is the daily chart. 1, 2, 3, 4, 5, 6 months. Well, we'll call it 5, because we'll go half, 2 weeks here and 2 weeks on this one. Yeah, if you look at this, like, look how clean this is. I usually cut off the wicks when I draw a lot of these, or I'll put prices on both of them just so I can see kind of where they're at. But, like, sure, it's not really, it doesn't have the higher lows thing going on, but it has the volatility contraction, which that, in my eyes, is just as, if not more important than building higher lows. Like, you want to see higher lows ideally, but see how these waves in the chart, these humps in the chart are getting smaller and tighter, and then right in here it spends a couple weeks of trading in this really tight range. That is just textbook. Like, that's exactly what you want to see right in there. And then you could potentially, like, if this were back in this time period, you could potentially draw kind of like this bigger line I have here. You could draw maybe like a little trend down into here and a price level across the top of this. And what I like to do is kind of take a bit of an entry at or close to where the trend's hitting, as long as all these moving averages are really tight. As you can see, they are right there. What did I do? But yeah, what I was getting at is that's what happens afterwards. So you have the COVID sell-off, and it forms this kind of jagged, choppy base, which doesn't look as choppy when you're way zoomed out like this, but I assure you it was pretty damn choppy when you're in there close. And then after that base forms just like a big launching pad of like approximately 5 months-ish of moving sideways and tightening up, and then boom, riding that momentum up. Chris tends to think, Kulamagi tends to think 3 to 5 days into a move. So if you were buying in here, I guess it depends on how the momentum is. To 3 to 5 days, you wouldn't caught that much. But then this day, after earnings this day, when they had that good earnings gap, you can see it just rocket up, which is just a beautiful play. honestly, I'd be looking to take like partial profit somewhere in here, and then on one of these days when it closed below the 20 EMA SMA here, then probably get out of the rest potentially, or another partial and let some ride until it breaks one of these other ones. You know, who knows? I mean, this thing's still holding up really well, but I will now show quickly what caught my eye on the weekly. Like, look at that. That is just a perfect chart. If I even remove these old drawings, like, boom, COVID sell-off, kind of forms an awkward jaggy base. Jagged, not jaggy. Comes up, makes this flag, this pennant shape flag here, and then just off to the races. Boom. Percentage wise, man, if you caught a good chunk of this, even if you would have sold, let's say here, you're looking at 36, almost 37% gain. Now in theory, let's say you held to here, almost a 60% gain. Right in this range, boom, 47% gain-ish. So it's like you could have gotten amazing gain out of this in not very long, 1, 2, 3 weeks, and you're getting half again your money. Excellent move. But anyways, this chart just caught my eye, and as I'm studying setups, I figured I would just point this out of how this really is what you're looking for on the breakout kind of plays. You want a good strong name. This thing has a really high ATR, 21.6 currently. It was probably lower in this range, but that's part of what you want to see is the volatility, the ATR contracting and showing that supply and demand are reaching like an equilibrium, because then the next positive piece of news, in this case it was this earnings report, the next positive piece of news that comes out when buying and selling are already at a pretty close to an equilibrium, it's going to send that thing, to the moon, as they say. But yeah, that's all I got for this one. And yeah, maybe I'll click through, find another one, and be making another couple minute video here in a few minutes. So who knows?